Now we are ready for another roundtable on risk management in digital age. In the opening, I've spoken about the big changes the digitalization brings to the financial sector. It is not only the hardware, or it's not only hardware, software demanding process, but it also requires new business models and also new abilities of people using it, working with it. Financial institutions have enormous amount of data that they could use with new technology and applications, much easier to scale the data for crucial functions such as credit scoring and so on. And as we talk about the financial services, it is not a surprise that it is very often quite the primary target for cyber criminals that want to obtain sensitive personal data. And lately also the 5G banking with its enormous speed come in place. Also with a question about the safety of the data transmitted through it. So that is why we are going to talk more about the risk management in digital age. Let me welcome the panelists. Pénzeš, the head of resolution section at National Bank of Slovakia, who is playing important role in positioning NBS role in fintech ecosystem, and as we've heard at the beginning about the innovation hub, so he is the one behind that. I would also like to welcome Miloslav Hoschek, consultant freelancer at Finextra, former central banker who worked also for commercial banks, Vienna Stock Exchange, and last 14 years concentrates on IT in financial sector. We also have Riten Gohil, partner at Slovakia, who has been a leading evangelist in the identity and authentication space for well over 20 years. Previously worked for Visa Europe, leading authentication products to the market, and he also knows the investigative roles, as he also worked with the Serious Fraud Office in the UK. And last but not least, Peter Alexanderson from Sweden, co-founder and CIO of Cover, an experienced entrepreneur in the IT industry. Already in 2002, he got the idea to remove passwords for good. He wanted to take security to another level, and he was able to create the safest and most advanced cybersecurity platform available in the world that we heard about already from Lydia at the first panel. Gentlemen, welcome all here. I'll sit next to you so that I can face you a bit. Also, there is a place for you to ask at Slido. You will work with the questions because I believe that you have many questions that I wouldn't probably come up with. But I will start with the one quite basic for me. Does the digitalization increase or reduce risk in the finance sector?
Thank you. Well, I think every change, every transformation.
It's turned off probably. This one works.
Yeah, thank you.
It seems.
Thank you for the question. Definitely, we are living in a changing world, and digitalization is bringing new challenges.
Closer to.
Okay, and thank you. So, and digitalization is definitely bringing new challenges and opportunities to the market and for regulators and supervisors as well. I wouldn't say that it's increasing risks. It's just changing the way how the market operates, and it poses this challenge for everyone to adapt and to embrace this change. So I think this is the core of my answer.
Thank you. Well, it was mentioned already before in the questions that if the cyber security is different in the tech companies or the tech banks, fintech banks, and so on, does it differ from the classical banks we know so far?
It is something that has been increasing its importance with digital technologies that are transforming the operation of incumbents and that are enabling operation of fintechs. It's important that these companies are able to handle also the cyber risks, and it's important for regulators to see that this is the case, that we see the market can handle the risk, and we are trying to guide the market in how to embrace and how to handle and manage this risk and set expectations that they should follow.
That's the regulator advising and setting the rules. But how about, Mr. Hoschek?
Okay, so I think that companies are not prepared for next decade risk management strategies. I'm talking about 5G digital strategy. In other words, neither telcos or neither banking are prepared to upgrade their digital strategies to the level of 5G digital strategies. In other words, what to do for banks not to be only pipelines for 5G digital strategies. In other words, EC 5G securities agenda is talking about new level of cybersecurity, which is quite unknown. In other words, we are talking about ultra low latency, which is a latency of 5 to 10 milliseconds. So neither banks nor telcos are prepared for 5 to 10 milliseconds. We see the practical example of Bank Santander near Spain. They opened 5G digital new banking branch with facial recognition and so on, based on 5G, cooperating with Telefonica. Thank you very much for British Embassy to prepare such an excellent conference. For instance, the Berkeley Corporate Banking Report from April 2019 is talking, it predicts rapid uptake of UK businesses by 5G industry, banking industry including. Thank you.
Okay, so in simplest terms, the answer is yes. You know, I generally believe, and statistics will show that the risks increase as we become more digitally inclusive as consumers and businesses alike, and that's not going away. I'm doing a session later on where I'll share some statistics. I mean, I'll speak a lot, you know, particularly from the UK perspective, where the growth in online digital fraud has largely grown in line with the growth in digital channels, and that's statistically correct. That's not to say that the digital world is the wild, wild west and you shouldn't interact with digital channels. Every bank has to go digital, innovate or die, right? I mean, you have to be in this space. Your question about, you know, how does it sort of differ from the large incumbent banks versus, you know, the sort of fintech challengers. One of the biggest difficulties for some of the larger banks is the ability to, you know, implement and integrate and deploy new defenses and technology, largely because of the stack they're operating under. It's often very box-based physical hardware that sits within the internal firewalls of large banks. More banks are embracing cloud, but they're still, you know, a step away. The difference between some of the challengers and the new fintechs is they've built their stack from the ground up using cloud-based API infrastructure, so the ability to innovate, deploy, and service new risk management technologies are a lot much easier and a lot more agile, which is why we see the likes of Revolut and N26 and many others are able to do this quite effectively. Not to say they're not, you know, vulnerable and prone to risk management and fraud. And it's the nature of the beast. You know, we are in a world where committing a crime remotely from various parts of the world is easier than robbing a bank, you know, with guns and a getaway car, right? It's just the reality of you know, the digital world has made things a little bit easier. And, you know, we can talk in this session more about, you know, what can be done to try and make life easier. But just as an opening statement, I'd say absolutely yes.
Thank you. What can be done to make life easier? I can imagine without passwords it can be easier, but is it then safe, or what can be done?
First of all, passport is not safe, so I think to take them away is a good way of digitalize your bank. And talking about risk as well, I'm not from the bank side, I'm from the cybersecurity side, and I think the only risk I can see, if you don't go digital, you will lose, basically. And so even if I ask my son, he's 28, who's your banker? He don't have a clue, you don't have a banker. So you need to go digital, and all the millennials will actually love when you go digital. And the more you go there, the better it's going to be.
So let's name, and I will use a question of one of you. Can you name 3 key risks banks will face in digital age and how to address them? I think we can start with the cybersecurity when you have the microphone.
Yeah, again, I think one big risk is if you stay with your old bank and you don't want to improve it, because everyone wants to go digital today, and you need to go with the instant payments, basically in the country, and also borderless payments between the banks. It's a risk to just settle down and think too much about all the regulatories. Open up the APIs for a lot of different type of new millennial companies, so that then it will win, I guess.
So there are potentially a number of risks on the horizon, many of which we're experiencing in the UK at the moment. I'd say one of the potential biggest risks at the moment, and likely to increase over the coming sort of months and years, is social engineering of consumers. This is basically the world of being able to manipulate consumers to believe that you're dealing with and transacting with a genuine bank, whether this is by email, SMS, what we call APP, authorized push payment fraud in the UK, which is now exploding. And all this is driven by the consumer being vulnerable and duped into believing that a request to make a payment or a transfer or some form of interaction with the bank is a genuine request. And this ability to mutually authenticate consumer and bank is a real gap in a lot of technologies that exist today.
But we heard about that for ages now, and does it improve on the side of the consumer? Are we more educated? Are we more careful? Are we, I don't know.
I think you know, I mean, education is certainly helping to a point. The UK spent a lot of money on education over the years, and it still hasn't resulted in record levels of online fraud. One of the main reasons why I talk about this a lot, why social engineering is going to start to become even more of an issue, is when, and based on which market you're in, PSD2, strong customer authentication, starts to come into the market. So on the one hand, it's designed to prevent fraud, which is its key objective from the ECB, but many banks are adopting this service with SMS-based one-time passwords and push messages, which look, you know, genuine, you know, from any scenario, but the customer itself could actually be easily duped into using that, what's seemingly the secure system, to transfer money to criminals around the world. And that's why your point about education is really key, because you now have to go to a step further and really educating the customer, saying, yes, you know, be educated, but at this sort of level to understand the difference between a request from a bank versus a request from a criminal, and distinguishing the two. And that's a hard piece.
Thank you, Mr. Hoschek.
When you want in 1860, when was put through Atlantic a first wire cable between London and New York, want to send a telegram, it cost one word about $16,000. It means one word in present dollars, let's say $1 million cost one word. Something similar is compared that 4G or 3G industry compared with coming 5G banking industry or digital industry. In other words, 5G will be 20 times faster as present gigabytes in 4G industry.
You've spoken about
Again, and I want to add, it's adding the things, but the word risk management is not only buzzword, but it's a huge religion, which I personally don't understand very deeply, because in my years that kind of British education of risk management was not presented here, and I am surprised that even now the present generation doesn't understand the nuances and deepness of risk management attitudes. Coming to my topic of 5G risk management from bankers for next decade to upgrade their banking industry, to update their digital strategy in their banks or their telcos, they should really understand the deepness of risk management, not only in technology things, but in non-technology, legal aspects, EC aspects, implementations of 5G steps to national regulations.
Regulation, yeah. What can be done by the regulator to minimize the risks in the fintech industry?
I think the most important is that there is a constant dialogue between the industry and the regulators. For regulators, I think it's vital to carefully watch what's going on and to be able to understand how the rules needs to be adopted. So I think one of the key is to discuss and to meet at these conferences, and also use innovation facilitators, innovation hubs and sandboxes to talk to each other. Regulation will never outrun the market. So we in regulatory authorities hardly have capacity to anticipate and create the rules in before something's really going on the market. Well, by observing, we can adapt what is there. Certainly, those risks that were mentioned here, cyber risk, is on the very top of the radar of supervisors and regulators, and there are constantly new rules being adopted. Risk stemming from money laundering is something that is quite high now on the radar of supervisors and regulators. Now we are trying to cover a certain segment of crypto businesses under anti-money laundering regulation that will come into force next year to ensure that the risks of money laundering in that segment of fintech market are going down, are somehow managed.
The black side of blockchain, so that's what you aim.
Blockchain is technology. There is nothing bad or good on technology, but the technology can be used in a good or bad way. Crypto exchanges, certain crypto exchanges and certain digital wallet providers, they handle money. Previously there have been some failures on their side, and these failures were recognized by regulators, and now these types of crypto businesses will need to keep some preventative measures and need to report incidents to supervisors. So this is quite a big change for this segment of fintech market. And then outsourcing. I think outsourcing is something that is very important now. When we discussed previously cloud computing and cloud services, this is becoming more and more common in the traditional financial intermediaries like banks and insurers. We see this growing trend of outsourcing these services, and this is also high on the radar of supervisors and regulators. We want to make sure that the banks, insurers, they don't outsource responsibility. They still need to keep responsibility. They need to prevent vendor lock-in. This is quite important. They need to be able to prevent concentration risk, not to engage a provider who is very specific, who cannot be switched to other providers. So these are maybe three risks and how we are trying to cope with them.
Outsourcing, a big topic. Also, we have the questions on it because I think that's probably aimed at you, Peter. Can be risk management incorporate lending outsourced to third parties as part of the alternative distribution channels?
Yeah, absolutely. I think that.
And there is one more, I think, connected question. Is it smart to outsource the management of the cyber risk? You can connect both, I think.
Yeah, well, I think it should be kept inside a bank, to be honest. I think that's a smarter thing to do. I mean, banks are used to do all this risk management by themselves. And of course, some of the things, smaller part of the risk they can lend out to someone else. But the main task should be handled by the banks, I think.
So what kind of data should stay within the bank or fintech company? And what kind of data should be used openly to kind of gain from the digitalization and from the new methods we have and from the new analysis that probably the AIs will be able to do quite fast and properly?
Yeah, I mean, data is really important, and you know, part of the problem we have with sort of cybersecurity today is, you know, the data breaches that we see around the world often then used to commit crime. So, you know, containing data within the firewall of a bank is a very crucial sort of strategy that many will adopt. With cloud, with sort of encryption levels to the sort of level we see today, we are able to, you know, have a hybrid approach, the best of both in many ways. So you have the secure keys, which contain the full PII of the customer or individual or entity within the firewall of the bank, and then you can share attributes outside to third parties to then be able to profile and use, you know, and leverage insight and innovation from fintechs and third parties, you know, much better. So that there is a world where you can do that, and it is being done, you know, in anger. GDPR has obviously made people think about this a lot more than they ordinarily would have done in the past. But all I can say is having been through the experiences of managing, you know, a marketplace of third-party data providers on behalf of multiple clients, and the GDPR practices and provisions involved in that across the globe, it can be done. It just needs, you know, a well thought through process, and obviously the appetite of the bank itself to want to allow some data to be exposed to the outside world.
The banks, they have enormous amount of data, but are they using them, and are they ready to gain the most what they can from the new analysis of the data they own?
I mean, I certainly think so, but maybe I'll give you a chance to speak as well.
You are giving really hard questions, and as I understand it, they are a little bit different as we have here to be prepared in the next couple of weeks. However, I want to add that Slovakia has missed the train in 2019 in spring when there was an ice hockey world champion. And it was the big possibility to telcos or bank to present, for instance, first 5G banking stands, 5G banking points, as is happening in 2018, 2019, not only in Western Europe, as I explained with Santander, or in London, but as I explained that, for instance, in Shanghai from October 2019, it will be covered megapolis with 30 million inhabitants with 5G coverage. In other words, so that means that the trains put us to the back players, and I am not very proud of this country in this quote development. I feel the banking is still in the, as compared with IT conferences which I am visiting, that it's 10 years behind the IT wind which is really in the IT conferences as Oracle, IBM, and VMware are giving here. Again, returning to the fact, I give a parallel, and the parallel is here is US Embassy, and there is several years a big fence. Let's name that the big fence Chinese wall, because it's not a fence, a simple fence of many previous reasons, but this Chinese walls is really here in this part of Central Europe, which is coming to East and West either. So this Chinese wall, it means practically, to give example, that U.S. Federal Commission, Communication Commission prepared a several report, and one report is talking that China is surpassing US in the latest wireless technology. For instance, in China in 2018 has deployed 350,000 5G operator base stations, nearly 10 times more as deployed in the US. So the 5G cybersecurity is the reach about many, many new things. Thank you.
Oh.
So whether the banks have a lot of data, I definitely think they do have a lot of data, and so does the regulators and supervisors. The challenge
but
is...
I'm not sure that they are using them already.
I'm sure banks and supervisors are using them, but since every day there is more and more data coming, it's more challenging to using them in a meaningful, good way, in a way that helps to identify quickly all the risks that can emerge. So that's certainly a challenge, but the digitalization is offering and helping, assisting also in this area. We have the whole big data thing here that is certainly going into this direction. You meant how to better utilize the data we have, how to build meaningful business intelligence out of them. We see that the market is going that way, and we as well. So this is one of the great opportunities we see in the fintech to fully utilize the opportunities that are stemming from big data.
Riten, you've spoken about the cloud and its advantages, but in a way, in the banking sector, usually it takes time to compute if there is some big risk event or something happening. So then is it really an advantage to have a cloud and all the data there?
I'll say yes, because my company sells a cloud-based risk management tool. But just looking at it from a wider sort of industry perspective and the trends on a global level, that most of the one of the largest risk management products in the world is developed by a company called Fair Isaac FICO. They've just launched Falcon X this week, which is a cloud-based product which is designed to provide a lot of the large banks around the world the ability to deploy and extrapolate new models for risk management at a lot quicker pace than they currently do. So historically they were doing a lot of on-premises based deployments, which required a lot of professional services support and maintenance to modify and adapt models as fraudsters and criminals change their methodology. And everyone's recognizing that you have to now move to the cloud, because you need to be able to respond quick enough to the attack vectors that exist out there, which, sending a team to, from the US to any part of the world to then adapt your in-house deployment is not simple enough. And by the time you fix that particular problem, new problems existed. And, meaning
there's a new one.
Yeah, a new one sort of arrived and you're burning cash elsewhere. So cloud is really important, not just purely from a perspective of agility and innovation, but just from a support maintenance perspective, that you can make modification and adapt services much quicker than you can, in an on-premises sort of capability.
Yeah.
So yeah, I'm from Sweden, and to using the data from the banks, we made it to the extent. So all the banks jointly went together, put all the data in one pool, cloud. And we are using that for basically everything. So me as a person, I use this 5 to 10 times a day. And all home pages, everything from insurance companies, tax offices, you're using the same ID. So this is, you have 750 web pages to log into. You don't need any type of registration, just log in and they can see that it's you. All the payments are done with this. So using the data, I think is very, very strong, very, very powerful for the banks.
It seems the simpler it is, the safer it is.
Basically, as long as no one can steal any information from you, there is nothing to steal. And we also don't need 3D Secure anymore because we use the bank ID. So wherever I'm in the world, if I purchase a ticket in China, for example, the last thing that's going to happen is I need to approve that I'm me. So same application, one application for everything.
The more interaction we get from the customer with our system, do we learn something about his behavior, and is it easier than to maybe find out that there's something going wrong in the system, that there's something who's not supposed to be there, and then have fast reaction on the bad guys getting to our data?
With a solution like this, we put the user in the center, so the user are in control of all the data he's using, the login, transaction, credit cards, anything. So I'm going to showcase that after lunch as well with my own product.
Study.
Yes.
Riten was agreeing. You would.
Yeah, I mean, I do agree that you know, the ability to. I mean, machine learning has now enabled a lot of organizations to be able to, you know, look at historical patterns to then determine what new risk models should look like. And obviously, you know, the consumer behavior is an important aspect to that, which then feeds into new models and new ways of managing risk, and it just grows and grows and grows. But with any machine learning technology, you need some data to start with, right? The solutions like this don't work particularly well if you don't have a big pool of historical information to be able to then contextualize how you use that information to manage risk moving forward. So I'm with you that putting the consumer at the heart of you know, a user-centric approach makes a lot of sense. But you know, the key to this is just having a suite of different sort of capabilities, both within the in-house sort of element of the bank, and then, you know, some of the front-end tools that the consumer uses as well.
There is a question: are behavioral credit risk models better in predicting default probabilities? Are banks going to integrate social media data in their retail credit risk models? Mr. Hoschek.
Such hard question. It's as a castle to move to small apartment. In other words, really, I was surprised that Bloomberg was commenting China payment system and US comparison of payment system. And Bloomberg said following words, that China is among a growing number of countries showing that payments can happen cheaply and easily without banks and credit cards. In fact, many Chinese do not even have banking account. Chinese people use for payments mobile services with mobile that can do almost everything. The chat, the shop, send money to each other, or even make purchases on physical stores. China is becoming cashless. Opposite scary situation is it Europe and in US, when for typical €100 or $100 credit card purchase goes $97.25 or euros to merchant. Rest is split between issuing bank, payment processors as Verifone, NCR, the merchant bank, First Data, or card networks as Visa and MasterCards. This way are consumers missing or grabbing their own money of billions of dollars.
You want to comment, or
Maybe I want just to give my perspective on what you asked about using social media data in credit scoring, and we see this trend certainly also in banking industry. But at the same time, we see that banks are also in parallel keeping their traditional credit scoring models and systems because these new approaches are not that reliable as the traditional scoring models. So maybe it will take some time. And these data from social media are often not that reliable proof of creditworthiness. So it needs to be adopted with this in mind. I think the technology needs a bit of development.
by the way, what you? Okay.
Yeah, just this topic about social media in particular. I'll talk about some stats in the session later on about why your comments are absolutely spot on. That the unreliability of social media is a big problem, particularly given most of the data hacks we see are linked to social media accounts, and therefore, how can you truly trust a social media profile, particularly in the banking context? But this world is inevitably coming, and it's happening. I'm sure you've all heard of Facebook themselves collaborating with the industry to create Libra, their own new digital currency. So you can see that they're trying to bring Facebook credentials and identity at the heart of payments in the future with this ecosystem of multiple third parties, which incidentally does have Visa, MasterCard also as partners listed. And so, I think it has a role to play as as one leg of a potential number of legs within a risk profile. And, one of the things we talk about a lot in our company is, the combination of multiple data points coming together from independent sources give you a lot more confidence you're dealing with a positive actor than a negative actor. And so if it's used in the right way, it's got a role, but it should never be used, in isolation. And you should be able to determine very quickly whether, there's been a breach of a social media account at the same time. Otherwise, you're potentially opening up, the gate to allowing a whole identity credential to be used to, open up bank accounts, borrow money, take out mortgages, whatever a bank offers to the
So
consumer.
can Facebook become the biggest bank?
I don't think that's their end game. I think they want to be an enabler for banking services and use. I mean, it's clear their agenda is to use, the fact they've got billions of consumers around the world using their service to underpin, payments and banking in the future. And over the years, they have their own social connect capability to allow third parties to access for supposedly secure signing and accessing your Netflix account or whatever else use case they provide it for. But that started to be pulled back over the years because it sounds like they themselves want to be at the front of that rather than having an open service. So I think there's an agenda there somewhere, which is being at the heart of the consumer's financial services engagement. But what that looks like is yet to be determined.
I wanted to ask originally Peter Pénzeš, because I've introduced you as the author or as the one behind the Innovation Hub at the National Bank of Slovakia. Already the mentioning that the National Bank has its Innovation Hub is very interesting. So what do you concentrate on, what do you focus on there?
Yeah, so that's, I would say, too much of exaggeration. I'm not the author. Innovation Hub is something that is not that new. It's a concept that has been used by regulators, supervisors all around Europe for quite some time. We've been 22nd country in the European Union who created Innovation Hub in
Unfortunately,
national.
Prague is still not there.
Yeah, so Prague is following. So it's not novelty and it's not that revolutionary idea, but it's a platform for communication, for keeping dialogue with the industry. It's the platform that enables us to learn what's going on, how the market is changing, and hopefully also opportunity for the market to get some guidance from us on how they should do their business in line with rules. We see different entities coming up to us. There is quite a lot of interest coming from the crypto asset industry, and we see some interest from the area of alternative payment providers. There is also interest from the RegTech business, and we are giving them our best advice we can at the moment. As I said, rules are evolving in the areas where the rules are existent. We are trying to navigate them, how to apply the rules. Sometimes we see that the level of preparedness of those coming to us is not that high, but there we see opportunity also for us to maybe add one more element into functioning of our innovation hub, and that would be to be more visible and to be more open to use all opportunities to explain what is our role, to explain the basics the industry should understand about regulation. So
what can you offer to those coming to the hub, and what do they have to prepare to be able to enter the hub?
Well, it's not a hub is not a miracle. It's just contact. It's just someone writes us inquiry, and we make sure that all the relevant experts become familiar with the request we receive, and that they meet with the one who approached us. So we just combine expertise in our authority and offer the opportunity to meet with the one who wants to lead the regulatory dialogue. And that's basically it. We offer them guidance. For those who want to enter regulated business, we can do a bit more than for those who want to do unregulated business. For example, establish crypto exchange. That's something that has been not regulated by prudential rules. There is only this anti-money laundering rules, and for those companies, we point them to those anti-money laundering rules and explain to them that there are certain risks from the consumer perspective as well, but then that business remains hugely unregulated. So for them, we cannot do much more than that, what I explained.
Probably a question for Riten and Peter. Is there really a place for regulators to enter into the digital technology in finance? Don't they take it too broadly? Don't they do too much for the stage we are in?
I think the banks need to hurry up and actually start moving it a little bit, so it's easier for us that have tech companies. And one way to do this is to use platforms that already have a lot of banks in the system. That makes it a lot easier for us that want to connect to different type of banks. I'm not sure if that answers your question, but
That's I was just looking for RegTech that I wanted to ask you about, but now I don't know how to connect it, so I just ask about the RegTech, because as we speak about fintech, I found out you are a RegTech company.
Yeah.
So that deals a lot with regulations. So
Sure.
now, where's the connection then? You think there should be much more regulation than it is? So the opposite way than I asked before.
Well, I mean, there is a lot of regulation anyway, and more is coming. The fifth AML directive is upon us next year, and that's going to create a whole new raft of challenges for banks around the world, and obviously bring cryptocurrencies into scope as well, which is a very interesting topic. I mean, going back to sort of the use of sandboxes and regulators engaging with the industry, I think it's a very positive move. I think the most important thing about this is them being able to use the insights in an actionable way to develop policy and help shape regulation so that it becomes practical for RegTech in particular to be seen as more mainstream and applicable for banks. So there are a lot of banks who are at this event today who will look at technology like Minds and Peter's here and think, well, actually, yeah, it sounds interesting and it's all very cool and innovative, but what will the regulators over here think, and will they necessarily approve of us using this? And it's only when regulators themselves start to engage and start to be broader in their thinking about, allowing, not necessarily allowing, I mean, they're never going to say you can use solution X, Y, and Z, but at least not be, restrictive to prevent new technology innovations coming into the market, and if anything, provide a support framework, be it sort of, accreditation or some form of, lists that say, these sort of solutions are generally seen as being acceptable or approved, certified, whatever that is, to allow banks, in this part of the world to be more comfortable in using them, right? Without any formal endorsement, if that makes sense.
In this part of the world, there's a question: is Central Europe region considered as developed or developing in the area of digital?
Unfortunately, we are missing the train for about 5 to 7 years, as I said, in 5G preparation. For instance, a good strategist in each telco or banking should go through research papers, which has each of 100 pages, 200 pages, and such research papers in London or New York are publishing every day. They have less or stronger quality. For instance, Accenture, recent research was analyzing 80 blockchain projects and find little confidence about the ability of blockchain technology. Most of the responses has no confidence that blockchain project would deliver a positive return to investment. Same Reuters has in their research go through about 33 blockchain projects on banks, tech firms or stock exchanges, and have most of them have not gone beyond the testing phase. So blockchain is a very complicated thing. However, I think there are many possibilities, as we have mentioned in these tech points or tech places, as National Bank of Slovakia has. Thank you.
While mentioning blockchain, National Bank of Slovakia.
Yeah, thank you. I think we have excellent human capital in Central Europe. We have still very, very good technical universities here producing excellent IT experts in this region. So this is the competitive advantage that we have. We are trying to, as much as possible, use the IT expertise that is on the market, also in the National Bank of Slovakia, trying to come up with new systems and adapting the one we have to the digitalized world, and I can only confirm that also the changes that the PSD directive brought about, which requested all the banks to open their systems to third parties, that wouldn't be possible without checking from our side, and for that we needed excellent experts, and there was not a big trouble to have this expertise to find it inside. So I think this is a big advantage of the Central Europe, and also when we compare wages here and in Western European countries, there is still difference. Flexibility that was mentioned by some of the previous speakers. I think that this is something that is here in this region, so for sure.
We should be positive about ourselves. But as Miloslav mentioned blockchains, I wanted to ask if the cryptocurrencies are seen as a risk and the blockchain itself. Peter or Riten? I think Peter will probably deal with that?
So I don't think blockchain itself is a risk. I think it's a risk when my blockchain things should land on a technology company. I really hope that banks should take care of this and be the hub for sending this, whatever they're going to send between on this blockchain. So I think it's a risk to letting new company solely, like disrupted, try to run this show by themselves. I don't think it's a good idea.
Yeah, I think that's right. And you know, the financial services ecosystem across Europe and the world has been, you know, largely successful because of the trust by the ecosystem, the various players involved in it, the consumer trust in that, the government's trust in that, and that's something which almost the blockchain world is trying to move away from. You know, it's talking about this world of decentralization and you know, taking the onus back to the individuals who want to interact with the system. And we've seen a lot of this with the ICOs that have popped up over the last few years, initial coin offerings. So these are the startup blockchain companies who are going to purport to be the next PayPal of the world, or the next you know, big card scheme, or the next identity solution, whatever, and have raised a lot of money through you know, public coin offerings. And many of them are just based on hot air and, you know, just a white paper which was developed in the Philippines or somewhere, you know, with 5 pages. And, you know, it's resulted in a lack of trust in blockchain, you know, by a lot of people who have invested in this stuff. We've seen lots of criminal actions taken place as a result of these sort of ICOs. So it's not had the best start in the world, but I'm certainly with you, you know, that I think more control needs to be taken by national regulators. We're seeing it coming into scope into the 5th AML directive, which I think is a really positive step forward. And, you know, there are a lot of benefits blockchain offers, for sure, but it just needs the level of control that I think the colleagues are much better, you know, able to do than someone like we could.
From my perspective, I would say blockchain is a technology, and crypto assets are one way of using the technology. There are many other applications for blockchain, different from crypto assets.
I like the way how the central bankers never speak about cryptocurrencies, but always the assets.
Yeah. So we need to be careful about it. Crypto assets as such, there is a huge variety of crypto assets. We had these very volatile crypto assets such as Bitcoin, but then we see now the advent of stable coins that are pegged to basket of currencies or one currency, and there can be a good economic reasons for using stable coins to enable fast, very cheap transfers. On the other hand, the risk with all cryptocurrencies is this money laundering problem. So
that you were talking about at the beginning.
Exactly. So from this perspective of money laundering, we need to keep a very close eye on development in the crypto assets area, but there are certainly also positives.
We are out of time already, but I would probably at the end just one more question from the audience. Could recent market developments, Brexit, trade war, climate change and so on, slow down the introduction of digital age or speed up? What is your view? To everybody. Shortly.
So I will paraphrase Niccolo Machiavelli from 15th century, who said in his novel Prince, this paper or this study was forbidden for several centuries in some parts of Europe, even to read it. You will get capital punishment in Eastern Europe. So Machiavelli is telling it must be considered that there is nothing more difficult to carry out nor more doubtful of success and nor more dangerous to handle than to initiate a new order of things, I will say, Internet of Things, 5G technology, blockchain, and cryptocurrency. So the reformer has enemies in all those who profit in all order. So it was written 500 years ago.
Anybody would? No? So then I think I would thank you all for being part of the panel and for your views. I thank to Peter Pénzeš, Miloslav Hoschek, Riten Gohil, and Peter Alexanderson. Thank you for your questions, and sorry for being late. Now it's time for lunch to refresh a bit, and we'll continue at 1:40. If I'm not mistaken, let me check. Yeah, 13:40, that's the time for us to continue with a case study and presentation of Peter Alexanderson right here. See you.